Hey guys, welcome back to another video. In this video, we are going to go over a concept called New York reversals. Now, this is a trading strategy that we tend to see where in New York, price of currency pairs tend to reverse. So in a typical day of trading, we have three main sessions: the Asian session, the London session, and then the New York session. And what we tend to see is sometimes we get an Asian range, as we can see in this example over here. Price just ranges during the Asian session. We get a London push, and we get a New York reversal. Today was one of the days where we got exactly what we tend to look for when we look for New York reversal type trades. The two factors that we tend to look for before understanding we have a possibility for a New York reversal is an Asian range and a London push. So when I came to the charts this morning, I noticed that we had an Asian range, a London push, and so I could expect a New York reversal. So what I did was I went on the charts and I marked out possible POIs where price could reverse from. And what I noticed was we had this POI over here. So I marked it out. And then what I did was I went to the lower time frames and I monitored at this POI to see if we can get some type of reversal. We got the London push, and now all I was looking for was price to tap into this POI and then give us a reversal. Now if I go back using the replay tool to here, as soon as price taps in to this area, let's see what we get. Now generally when we look for reversals, what do we look for? We look for something like this: price to come in, pull away, pull back in again, make a higher high, break this structural point over here, pull back, and then we look to take shorts to the downside. And that's what we call our entry draw. Now let's see if we get that. Price comes in, we pull away, we get some type of higher high made, and then price breaks to the downside. Now at this point, what I was doing was I was looking on the lower time frames to see if we can get a pullback into an area where we can short from. Now this trade was a little bit risky because it relied on the 1 minute time frame. Since our POI was a 15-minute POI, we can use any of these three time frames: the 1 minute, the 3 minute, or the 5 minute. Since this was a reversal type trade and it aligned with a POI, it gave me extra confidence that I could take a trade on the 1 minute, and that's why I was happy to take this type of trade. So now looking at this, we got the breaker structure over here, and all we were waiting for was a retracement back up into this area. Now looking for order blocks that were valid, we can see we have this one over here. So as we can see, price hasn't mitigated this order block yet. It came very close, but it hasn't. So my eyes were on this over here. In terms of trade setup and what my stop loss would look like, I had my entry at this point and my stops above the high. So 5, I put it about a pip above the high. So I had a 6 pip stop, which is not bad for this type of trade based off the 15-minute time frame, as we can see. Now my target for this trade was actually London low, but also I understood that we were moving to the downside on the higher time frames anyway, so I was going to be with the higher time frame, so I could have an extended target. So dropping back down to the 5 minute time frame, or actually let's go to the 1 minute time frame. Let's see how price reacts. Price pulls down, it looks like it's coming back into our area, it taps us in, and then it pushes away. If you were the type of person to manage your trade whilst in the trade, at this point here is where you'd go break even, and it's all about trailing your stop at this point. So as we can see, we're getting down, we're getting into good profit. Price is pushing down. More opportunities here to throw your stop loss. And if I just go to the higher time frames now, to the 5 minute time frame, or the higher than the 1 minute time frame, the 5 minute time frame, we can see we are pushing down pretty nicely at this point. We're getting a larger correction here, and we're continuing down. Again, more opportunities to scale your stop loss. We get some massive news spike here. Now, if you didn't know, this was FOMC, news related to FOMC, and we come out and we take out our target. So as you can see, a New York reversal type trade was a trade opportunity that we got today, and it was a very successful trade and very rewarding trade as well. As we can see, from what I looked to get out of the trade, it was an 8.28R. So again, a very quick recap. What we look for is an Asian range, followed by a London push into a New York reversal, and that is typically the type of trade you would look for: Asian range followed by a London push followed by a New York reversal. That's it for this type of trading strategy. This is a New York reversal trading strategy. Hope you've enjoyed this system type of trade. Please look out for it, but before you start to use it, make sure you backtest it thoroughly and see on what pairs it works best, on what pairs it doesn't work best. Also the timings of when this New York reversal happens as well. I'm gonna leave that all to you. I'm not gonna give everything away. If you have any questions, make sure to comment below, and as always, make sure to subscribe, give this video a like, follow me on Instagram, and I'll see you in the next video.